Hi everyone. Today is Wednesday, February the 12th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Full moon last night, and so just ancillary. It apparently, I have not tested the stats, apparently this is some sort of bullish formation that allows us to see breakouts 78% of the time per Linda Raschke. This is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we are looking at the E-mini S&P 500s, and we are seeing the same sort of thing. And what is that? It's buy the dip, and we continue with price compression, right? We're waiting for a breakout or breakdown. Don't know what it is. Today we have CPI 8:30, and then Jerome Powell, and then the EIA report, and that will be very interesting. I do expect oil to have some little wiggles to the downside today. It's moved up really dramatically right into our price levels, and so that's pretty exciting how it's moved right into our lines as we move forward. Okay, but starting with the ES, we can see that we are still moving higher lows. Where's the line in the sand for go, no go? Same place as yesterday. That's 60.67. Above it, buyers. Below it, sellers. So again, what does that mean? It doesn't mean that as soon as it hits the level and collapses, you go short. That's not what that means. What it means is as it comes into the level, that's the first place you're going to see buyers primarily. And so yesterday, we can see, if we go to the 1 hour chart, we can see at that 60.67 area, yesterday, we lost the zone and then we built structure. Notice how long it took. Much of it in the pre-market, but as we move up over 60.67 and hold the zone, all we're looking for is higher lows. Notice, you could have done that right here and been stopped out if you did not have a wider stop, because it would have gone almost 10 points against you. However, if you would have tried it the second time, you would have held, and then we were above the moving averages, and Bob's your uncle. So what's the storyboard for study right here? Often, when we come into a very important line, you'll see a flush through that line after it looks like it's holding, especially if trend is down and it does not break to a new high. And so that's clearly what's happening here. We'll notice from the momentum down here that upside pressure is still running. And so expect the flush and then move to the south. Move to the north. Today, again, go, no go, 60.67. You might want to move it to 60.62, but I don't know. Where's the breakout area? Well, very interestingly, we've got a gamma line at 6100, and then after that, 6122. See how the Keltner bands are tightening up here. Traders are waiting for the CPI news, no doubt about it. Compressing, deep dips, going to be buys. So if you want a wishing order for something fairly dramatic, you could go to value area low and then right around 60.42. If it comes in and then recaptures it, we're in good shape. All right, let's go to the NQ. This is really important because yesterday, while I was doing the report, my position gave me an entry, and because my size was small, I just left it because I expected a bounce, but it really did run against me. So let me show you what happened. Here we are. What is it? Buy the dip. Are we in a very important space? You betcha. This is an inside candlestick, folks. Since, what is today, Wednesday? Since Monday, we've been sitting inside of this range. What's the breakaway formation? 880. Interestingly, that's also the key gamma line above, right? 880, you know, in this kind of environment with the NQ, it has a tendency to break out, flush above, and then come back. The next gamma line, 22,100, and you can see traders trying to get there, but so far the sellers at 22,100 have been successful. All right, let's take a look at that zone. I got long at 21,714 yesterday, right? Here was my 21,718 line I was discussing, exact same structure. Have a look. Downward formation. We can see momentum flattening out. We know the line is 718. This is why limit orders are dangerous coming into a line unless you've got a very wide stop or you just don't take the trade at all and you have very small size. You can do that also. But look at how the market gives us a second chance to get involved at that 718. Does it take time? Yes, it takes 4 hours. 4 hours. So what we can do, however, is when it comes into that 718, the moment it recaptures, because we know it's important, we'll notice momentum starting to tick up. And the moment it recaptures, we can take the long right into resistance. Where's the go, no-go line today? I think it's down here at, that's 21,675. My trade yesterday was worth almost 150 points. Absolutely fantastic. But I really did feel the heat because it came down 40 points on me before it turned around. I just happened to have one contract sitting on there. And when it recovered, I was able to move ahead. Here's something else. The VWAP is at 21,711. So we could easily preempt this 21,650, 21,675 zone and stop at 21,705 because we are in a framework that says we're caught in a range. Preempting that might be okay, but if it doesn't immediately recapture volume points of control or your moving average, it's going to have more downside. What do I like here? You know what? I'm a mean reversion trader. So if it pops really high past that 21,900 level, which is above the gamma line, I expect a reflexive fade. So I do have a short sitting there, same small size, but my stop is going to have to be at around 935 because if I breach 935, I've got 21,968 above that. All right, so there we have it. The go, no-go line right at around 21,690 or so with the VWAP at 21,710. Let's go to the YM. You know the reason that I do these videos, besides loving to talk about the market and it helping me set up for the day, is because I want each of us to take away how my analysis is working in my head and what you can take away that suits you and that you can replicate, because trading is a very individual game. At the end of the day, our brains are generally wired in the same way. However, there is that individuality for each of us and how we respond to fear, loss, gain, and all of those things. So you have to just know yourself. All right, looking at the YM, this is a topping formation. No doubt about it. I suspect that bounces are going to be sell zones, and I still think they are. If we get to 45,000, I think that number is lower now because we really are finding a lot of sellers right at 45,000. The breakaway is 45,200. And so what we are looking at here is lower lows and lower highs. So we are in a mean reversion space. 44,000 is still the go, no go, because trend is up. Notice when trend is up and momentum is down, our candlesticks will retrace each other. It just happens. Okay, so what potentially gives us a breakaway event for about 400 points? It's the break over 44,760. If you're interested in chasing that, you can. Just make sure you take some profit there. All right. For those of us who are following the trend, I like to go to that 1 hour and say, all right, what do we have going on? Obviously, we're trying to base, right? Here are some higher lows, some higher highs. So easily we could have a breakout that sends us right back into that 45,000 area. Very key. The go, no-go line, well below at 44,000, meaning dips that come into the value area low, that's around 44,400. That's going to be the region that we see buyers try to put a floor in. So if you're looking for a bounce formation in the YM, put down 44,400 and just wait for it. Okay? Compression tells us price action is tightening as we wait for a move in one direction or another. Let's take a look at Bitcoin, micro Bitcoin. Holy cow. Look at this. 1, 2, 3, 4, 5, 6, 7, 8 days in this formation. Look at the big picture. High, lower high, lower high, lower high. Look at the moving averages. Moving down. So the bounces, the line in the sand now is $100,145. As long as we bounce into that area, we are very likely to sell off. Okay? Now, what's the overall motion? The overall motion shows the Keltner band really sloping down. That's telling us there's selling pressure above. But underneath, it's telling us that there are buyers there. So my thought remains the same. The go, no-go line is 91,700. Until that's broken, we're going to see buyers at almost every new low on the day. So today, the traders have to defend that 94,000 or they're going to head to 91. All right? That's essentially what's happening, but clearly we've got price compression, right? This is making a diamond pattern, but we don't really have to draw that. What we can see is above 100,145, we should reject immediately. If we don't, we've got another rise into 110,000. If we do reject it, it's a great short that will take us down into 94,000 and then 91,700. Let's go to oil. The beauty that is this chart, I mean, holy moly. So here's what we've got. Negative trend. Look what's happening. Moving averages down to flat, momentum drifting up. What happens when trend is against momentum is candlesticks retrace each other. Whoa, here comes a big giant sneeze. Hang on. Really glad you didn't hear that one. Okay, so what are we looking at? You know, my thought is half back from this last wave. What is that number? Half back looks like 72? Yeah, almost on the money. That's our support zone, 72.12. Pulling back into 72.12, traders need to recover it quickly to go long, else we're back down to 70.30. Now, so what is the go, no-go line here? Well, this one's kind of tough because we're right in the middle of a nasty range. We could move all the way up to 76. We could move all the way back down to 67. So what do we want to do there? We want to watch for nice clean support. 72 to me is the go, no-go line for longs. If we lose it, we got to get back to 70 because that's where the volume point of control is. Let's go to gold. The beast that is gold went to the 1.6. Wow, man, this is just fantastic. Our Fibonacci's are just beautiful. Sorry about the sniffles, everyone. 2,900, old resistance, new support. If traders don't immediately come in here, we're headed to 28.77. I like that as the next buy zone area, but I like it even more at 28.46. That would be the better buy. So let's go to the 1 hour chart. We see that we've got some kind of reversion to a bigger mean here. Trend is down. Momentum is down to flat. Whoa. Ooh, we just got a number. Wow. Holy smokes. What? That is bananas. Sorry, folks. Hang on. Oh, my goodness sakes. Hang on. That is crazy. Okay, 586 is now the floor. In the NQ, that was some kind of ugly read. Okay, hang on 2 secs. Sorry, I did not realize I had an order sitting out there, and it did. So let's see how we hold. What's the next line in the sand? Yeah, so gold came in hard. Look, they're going to try and bounce it here. They are. They are going to try and bounce the line here. It is what it is. We'll just see how well price action holds in this space. I would not be picking any bottoms right now. Wait, get onto the 2-minute chart and let it build some structure. Okay, but it's come right down into this 2887 area that I said we could see. Now all we have to do is watch to see if we have a bounce off of the zone. And I do think we do. We'll just see how it goes. Okay, SPY. I have no idea what the number was, but it doesn't really matter. Here we are. Whoa, 600. Beautiful zone. Value area. Value area low at 600. Everybody's been buying that number. If it loses that zone, there's going to be trouble, right? We're going to have trouble if we lose this zone. Here's the thing. We have a tendency to flush the traders and then bounce forward. Now, this number could be awful. Seriously, it could be very dramatic, but it might not be, right? We might just have some kind of reflexive move and price action to move up. So what would I say? Above 600 recovery, it's a long, that's the no-go line, the go, no-go. Buyers above it, sellers below it, and if we lose this 600 area, we're off to 595. Man, I wish I pulled that order. Gosh, I hate when I do that. Crud-sickles. Okay. Here we are in the Qs. Same sort of thing, folks. There's the flush. We expect the wick action to come in. The go, no-go line is 521.82 in the Qs. So we've come right into it, and we began a bounce. Well, we'll just have to see what happens here, right? Let the chart move into a space where you're actually seeing structure. How does that look? First, go to 3-minute candle. Let it flush out. Sellers clearly still in charge. You want to wait for a failure to test lower, a bounce into resistance, that's going to be frontline liquidity at 525, and then a pullback that holds a higher low. That's the only thing we can look for at this time. All right, good luck trading today, everyone, and I'll see you on the streams. Remember, we've got Midday Moneyball, where we'll be going over trades and trade analysis, and we shall see you soon. Thanks so much. Take care.